All right, let's get right into it, Jeff. Your word of the day today is motion. What's in motion? We saw bond yields move to the downside. Is that the motion you're talking about?
A lot in motion indeed, Frank, but the motion I'm talking about is the magnificent motion. Look at the magnificent motion in just the last month. We have seen Google up over 21%, while the high-flying backbone of this rally, because remember, Frank, it's so appropriate. This is the 100th day since those April lows. And if you remember, you were giving me the business being a lonely bull, but we're up 34%, primarily led by NVIDIA, Microsoft, and Meta, which are now taking a breather. So there is a motion, a magnificent motion where you're seeing some of the high flyers getting sold and some of the laggards, like the Apples, specifically the Googles, being bought.
All right. So with that in mind, we're going into the jobs report tomorrow. What are your expectations? The estimates for 75,000 jobs, as I mentioned earlier, I was talking to some traders. They say it's going to have a market impact if it's 10,000 above or 10,000 below. But they think if it's kind of near the estimate, it doesn't have a big impact because Jay Powell was very dovish at Jackson Hole. Do you agree or disagree?
I agree to an extent, Frank. Yes, Jay Powell telegraphed. He was sending smoke signals very clearly and succinctly to the marketplace that we're going to have a rate cut in September and possibly two more. So a total of 3 rate cuts in 2025 at the October and December meeting. But what's interesting is no one's really looking for, what if there's a strong jobs number? What if there's a stronger revision? That could put the other back 2 rate cuts in jeopardy. But I'm looking for something around 75,000 plus or minus about 25,000 should not deviate from the plans of an imminent rate cut in September.
All right, so Jeff, you mentioned I was giving you a hard time about being a bull. By the way, I give the Bears a hard time,
too. Did you not?
I give the Bears a hard time, so it's okay. I give everybody a hard time.
Fair enough.
I want to point out something, and I'm not giving you a hard time. I just want to ask you about something you brought up to me before a couple appearances ago. Is the money sitting in money market funds? So right now that's sitting at $7.2 trillion, okay?
A lot.
So, by the way, Strategist out with a note yesterday. I want to get your opinion on. They say the money market percentage of the S&P market cap is actually pretty close to historical lows. If you look right here, I don't know if you can see it, but it's down 12.7% of the S&P market cap. So basically their argument was, how big of a boost could this really give the S&P and the markets if this money comes out with a rate cut? Because it's not that big of a percentage of the S&P market cap. Agree or disagree with this thesis that, yeah, that money's in there, but even if it comes out, it's not that big of an influence?
I don't fully disagree. That is a significant amount, but it's not overwhelming. What's interesting, Frank, this is a melt-up. This is a 35% historic move higher. Why is it historic? It's because of the volatility crush. We saw the largest volatility move lower, meaning when the VIX was above 60 back in April, to just hitting 14 back in August. So that volatility move lower has been the melt-up, but I think there's underinvested. I think there is some cash on the sideline. There's also some shorts out there. That's why I think the S&P 500, which has already had 20 new all-time highs in the year, I think it's going to have more all-time highs in the month of September, which is against the contrast of all the seasonality folks talking about. September is not a good month.
Jeff, we only got a few seconds left. I want to get to your pick. It's the IWM, the small cap ETF. Why now? Why the small caps right now?
Well, I like IWM specifically because of the mid-cap component. There's about 700 mid-caps in IWM. But I'm also looking at Google. I think there's more room to run in Google. So there's a little bonus pick for you. IWM and Google. New all-time highs in Google. It's going higher. They make so much money, Frank. About $400 billion a year Google's raking in.